Hello, everyone, and welcome back to Sudden Wealth. I hope you're having a wonderful start of the week. If you do enjoy the content, please consider dropping that like and subscribe. The channel greatly helps, great appreciates that, and thanks for your help in making the word well known. So, little pullback in gold, little pullback in the oil prices as well. Stocks have rallied quite aggressively. Bonds are actually down, and that actually tells me that there's still some difficulty to accept whether what's happening in terms of conflicts, well, in that part of the world that you know, if it's going to be positive, bullish or bearish for stocks. At the moment, we seem to rally one day in bonds, go down the other day in bonds, because that's a bit of a fight between money printing for the conflict or keep raising rates due to higher inflation and potential higher inflation coming from the conflict. So I think what the markets are looking, especially the bond market, is for a decisive signal, let's call it that way, from the central banks. Like, how far are they willing to push back on the targets of 2% in order to help fight in this war. Now, what I'm expecting, this is a bit of a macro prediction. There's no price targets or anything associated with it. I think that at some point we're gonna see a revision of that 2% inflation target. I think it will be probably moved to 3% at least, maybe 4. I would say 3 seems very likely, and it's going to be, the reason that's going to be provided is that there are certain sources of inflation which will last longer and they are not under anybody's control. Those being the armed conflict, the two of them, one in Europe, one in the Middle East. And it's going to be something like, in order to push for the energy transition, from oil and gas to renewables, hydrogen, carbon capture, batteries, all of that, we will need to basically bite the bullet a bit longer in order to have in place the necessary investments in the beginning. That is my feeling, okay? Don't have any special information, but that's what I would say, that they could get away with a higher inflation target while people actually understanding or at least having a proper explanation, let's say in their view, for that increase. Now, I do think they made a big mistake when they referenced 2% in the first place. Reason is very simple. If you go back in history, about 150 years, we got 2% inflation like 8 or 9 times. So it's something, fairly rare. I mean, but people have what is called the recency bias, because they are used to see some level of inflation in the near past. They just assume that it's always been like this, or for some reason, I don't know. I mean, 2% inflation and beneath 2% is actually quite rare. Now, when it comes to bonds, that's the situation. We are a bit far away from the bottom, about 2 or 3%, but the bond market keeps very volatile. Stocks are on the upside. Why? Again, very simple. We touched the bottom side of the channel. We actually tested the 200-day week moving average on the S&P, which was about 4,200, little bit something. And when we went up, what I mentioned was we are between typically this sideways channel, which is around 4,350 to 4,550. So this $200 range in the S&P. Sometimes we go to the extreme, like we did to the upside, a little bit around 4,600 and a little bit above. And sometimes we go to the extreme on the downside, which is around 4,200. What I said was, if you start seeing that level break convincingly, it's not something like this, but actually start to try to break it, then we are talking a different story. I didn't see any of that. So while everybody was already predicting, oh my God, this is it, the beginning, Harry Dent was already predicting the end of the world once again, I said, no, it's a simple, just visiting the lower part of a channel. mean, it's really that simple. You see, that doesn't sell. It doesn't matter. Like, I was completely right. I called it almost to the penny, months in advance, or at least weeks in advance. But it doesn't matter, because I didn't come here to talk to you about how the world is ending tomorrow and the stock market is going to be chopped in half for no reason. So you see, because I didn't do that, I don't get as many views as I would but I refuse to play that little dishonest game for views, because, as I said, I do this as a hobby, and I do this to try to share my my analysis on the market, and not to come here. Of course, I throw a bit of clickbait. I mean, it's part of YouTube, but I don't come here, to kind of, oh my God, this is it. The world is here. The end. We are finished. Mad Max. Have you seen the movie Mad Max? That's gonna be as in 2 weeks. I cannot do that as an honest person, because fortunately, I don't depend on YouTube to survive. Now, on the crypto side, you may have seen that that Bitcoin basically went up to something like a bit above 30,000. Actually, it crossed 30,000. Depends on the exchange, okay, that you looked at, okay? So there were certain exchanges where it stopped at 29,440 or so, and there were others that actually spiked to 30,200. It depends on the amount of shorts that you have in the platform that were liquidated. And here is an interesting part. This is what happened to people that leverage trade, okay? So there was a false report that a spot ETF for Bitcoin has been approved. So the whole thing spikes up. And by the way, that's a good, for you to have an idea, that's a good feeling for what's going to happen, in my opinion. But so what you see is spike up, news is false. So on the way up, it liquidates a bunch of shorts, and then spikes down because the report was false, and it liquidates a bunch of longs. So what I'm trying to say here is both shorts and longs got annihilated. But this is what happens when you play the little game of leverage trade. Like, there's a reason why you see on top 78% of people lose money when trading with us. But if you go to eToro and all these the reason is this. Here you are, Bitcoin is quite up, I think $1,500. It's outperforming Ethereum, as it's normal in Q4 of the recovery year. I also said that, and so far it has been the case. And this is the danger of leverage trading. This should be a lesson to everybody watching. Like, you see those wicks, like those little things like this in the chart, that's people's lives getting destroyed, okay? This is what happens when you leverage trade. Now, we actually ended up much higher than expected. I do think the market's starting to believe that because the SEC did not appeal the decision in favor of Grayscale converting its Grayscale Bitcoin Trust into a spot ETF, that it's now a matter of time before the SEC is forced to approve a Bitcoin spot ETF. Now, be very clear. Do I think Bitcoin is a particularly good technology? No. Do I love Bitcoin with all my heart? No. Is it better than Ethereum, in my opinion? No. But it's very important to understand. If Bitcoin does well, we all do well. And if institutional money starts coming in via Bitcoin, and there's already been spot ETFs for Ethereum already filed, the more likely is that those are going to be approved. And the more likely even more money comes into the system. Particularly if you have altcoins like I do, you want Ethereum to do very well. Why? Because the main liquidity pair between any altcoin is with Ethereum. So if Ethereum does well, because it's bonded with liquidity pools to altcoins, altcoins will do well. So that's why if you ask, why do we see Bitcoin goes up and Ethereum, then the altcoins? And then when it goes down, Bitcoin goes down, Ethereum goes down, then the altcoins. Same reason. Liquidity is thinner with the altcoins, so they pump higher, but they also dump worse when it goes down. That's it. Nobody talks about it because they don't really understand it. So that's why you see typically in cycles. This cycle is a bit different, but that's why you would see Bitcoin drops 85, Ethereum drops 95, altcoins drop between 95 to 99. That's the reason for it. But when it goes up, that's why Bitcoin went up 300% in the last cycle. Ethereum went up, what was it, like 12-fold, I think, or 15-fold, and that's why the altcoins went up between 100 and 1,000 and 10,000-fold. So they pump higher, they dump higher, they dump more as well. But the point is, with institutional money, for price appreciation, in my opinion, it's going to be very relevant that these ETFs are approved, particularly the BlackRock one. Why? Because BlackRock is one of the 3 most important companies on the planet. I'm not saying they're good, they're bad, that's not the point. I'm just saying they're the top 3 of the most important companies in the planet, extremely close to government bodies, which means there's also an okay from a government body. I think the best thing we could get is now next the SEC loses a major lawsuit, Gary Gensler goes away, and the US comes in with actually a proper regulator, and the US remains the leader in the financial world for the future. This is what I hope for. Not sure it's going to happen, but I do see that guy has pissed off many Democrats and Republicans alike. So I get the feeling that he's going to be invited out probably within the next 6 months, I would assume. We'll see. What else? What else I wanted to say? Yeah, so we approach the end of the recovery year, which is the most boring year. This endless sideways movement can happen, but now you're going to start to see, in my opinion, from time to time, I'm not saying every single day, that's bull market territory, but you're going to start to see some pumps, like 4% one day, 3% one day, 5-7% on Bitcoin one day, and still with selling, but 1.5 to 2% selling versus 7 to 8% pumps in some occasions, and that should start pushing us higher. Key numbers, key range to see when we start getting there: Bitcoin 38,000 to Bitcoin 42,000. Why? Because the average price of Bitcoin in the market right now is around 40 to 42,000, which means by the time we get to 38, 42, the majority of people are starting to be on the green rather than the red. And a lot of people have been in pain, so if they see a little green light on their portfolio, they may be tempted to sell. I don't know if it's going to happen, but I get that can happen. So 38 to 42 will be the next levels to watch. Will we get there before the end of 2023? Difficult to say. I will know a bit better down the road. But, yes, there's the potential that we actually cross at least 35,000 by the end of the year, but we will see. Okay, and people like Peter Schiff will be proven wrong once again. I would hope he would lose credibility on that, but he won't. And unfortunately, it's the reality, but I hope that he's wrong enough for people to finally see through his BS. So thank you very much, guys, for all your support, and I'll catch you in the next one.